Hey everyone, this week I'll focus on sales trends, what the overall activity looks like, where investors are focusing their attention, and what that means going forward. Last week, during our webcast focusing on interest rates, Marcus & Millichap's CEO Hassam Naji shared a graph showing the number of commercial real estate transactions by quarter and another showing an investor survey suggesting investors are focusing on secondary and tertiary markets. You can access the replay of the webcast on our website, marcusmillichap.com. As most in our industry are well aware, there was a dramatic drop in transaction activity in the second quarter last year. This, of course, reflected the challenges of closing deals at the onset of the pandemic with a combination of logistical problems and considerable uncertainty. As investors have adapted and more clarity has emerged, sales activity gradually recovered. In the fourth quarter, sales were almost back to normal on a macro level. But while the total commercial real estate deal count in the fourth quarter of 2020 was only down 5 to 10% compared to 2019, there is a lot of variance by property type, geography, and price tranche. In the fourth quarter, sales of $20 million plus full-service hotels were down by more than 61% compared to 2019. At the same time, sales of industrial warehouse facilities between $2.5 and $10 million were up by more than 25% in the fourth quarter. In general, sales of properties under $20 million recovered faster than properties priced over $20 million. And while apartment and warehouse sales gained traction more quickly, reigniting sales activity for hotels, seniors housing, urban office, and shopping centers has been slow. From a geographic perspective, secondary and tertiary markets are being favored over gateway cities. Almost 58% of apartment sales are now in secondary and tertiary markets. If you go back 20 years, it was the inverse. Almost 60% of sales were in primary markets back then. This trend holds true with retail, where we've gone from 58% of retail transactions being in primary markets to almost 69% of transactions now being in secondary and tertiary metros. A big part of this has likely been driven by single-tenant net lease transactions. The trend for office has likewise been dramatic, with the share of transactions in secondary and tertiary markets rising from 39% to 65%. And industrial has climbed from 36% to nearly 63%. As you can see from the graphs, this trend has been advancing for 20 years, but it has accelerated since the onset of the pandemic. The recent acceleration of the trend may be tied to the pandemic, which has boosted migration from primary metros to smaller cities. Investors are simply following the migration. The big question will be whether people will move back to major metros like New York, San Francisco, LA, and Seattle after the pandemic. And if they do, whether investor capital will follow them back. This is one of those areas where investors have an opportunity to get ahead of the curve. If investors believe people will return to the urban core, there could be opportunities to invest ahead of that movement. If investors believe the current outmigration trends will hold, then it's an opportunity to focus capital in the cities that are growing fastest. This is one of the debates I plan on tackling on April 27th with the leaders of our multifamily, retail, office, and industrial divisions, the next Marcus & Millichap webcast. The information we share on that webcast will be the distilled feedback of literally hundreds of clients we have recently spoken to across North America. This will be a fantastic event for investors who want to take a good, hard look at the horizon.